Good morning, everyone, and welcome. My name is Lauren Steiner. I'm the founder and CEO of Grants Plus, and I am very pleased to welcome you to this year's Cincinnati Giving USA Annual Report Briefing. Today's event is co-presented by Grants Plus and AFP Cincinnati, and we are very proud to be continuing this important tradition of bringing together our region's nonprofit and philanthropic professionals to reflect on the state of giving in the United States. For more than 2 decades, this event was generously sponsored by the Junker Group, and I do want to recognize Jim Junker for his outstanding leadership and vision. And for 21 years, Jim and his team helped build this event into the trusted space that it has become for insight and connection. And we're very honored to continue what Jim has started. As some of you may know, Giving USA annual report on philanthropy is the longest running and most comprehensive report on charitable giving in the country. It was first published in 1956, and it is produced through a partnership and collaboration between Giving USA Foundation, which is the public service initiative of the Giving Institute, and Indiana University's Lilly Family School of Philanthropy. At Grants Plus, we're proud to contribute to the effort. We serve on the editorial review board, and so we help ensure that the report is grounded in sound analysis and also help practitioners interpret the findings and apply them to our work. It's important to note that Giving USA is written as an almanac. So it reports what happened in 2025, but it's up to us as practitioners to take that and apply it to our work. And that's why discussions like today's are so valuable. And as you know, our work today is more challenging than ever. The philanthropic landscape in 2025 was one of the most turbulent I've seen in my career, shaped by political and economic uncertainty, some shifting priorities of donors, and some tremendous pressure on us as fundraising professionals to do more with less. So in times like these, I think data like this becomes critical. It helps us to make informed decisions and advocate effectively for the causes that we serve. So before I turn it over, a little bit of housekeeping. We will close today's session with Q&A, and Melissa will jump in to answer questions throughout the presentation as she is able. So please enter your questions in the Q&A panel to make sure that we see them. We've also enabled live transcription so you can view the closed caption during the session. And before everyone asks, we will be sending out the recording of this as well as the presentation slides after the webinar, along with a survey to gather your opinions. And so please be on the lookout following this for that email. So thank you again for joining us, for your continued commitment to strengthening organizations and the greater Cincinnati region through philanthropy. And now I am pleased to hand things over to Ken Coggeshall, Executive Director of AFP Cincinnati. Take it away, Ken.
Thank you, Lauren. Thanks for that great background and great introduction. That was really terrific. And thank you and Grants Plus for being such terrific partners in bringing this presentation together. I also want to thank, if we can go to the sponsor slide. There we go. Yeah, so thank you to our event sponsors, Horizon Community Foundation, the Leadership Council for Nonprofits, and Magnified Giving, all doing terrific work and generously sponsoring us. And then, of course, Movers and Makers as our media sponsor, our stalwart, loyal, and dependable media sponsors there at Movers and Makers. And then I also just want to reiterate and kind of second what Lauren said about Jim Junker and the Junker Group and just the wonderful work that they have done on this over the last couple decades. This was his vision, and he's the one that pulled it together for a long time. And I'm fortunate enough to call him a friend, and just really appreciate all the work that he has done over the years on this presentation. Um, I also want to recognize on the next slide the supporters of Giving USA specifically. And obviously, I'm not going to read all of them. It's a pretty long list there, but as you can see, there are a lot of people that support this effort. So we certainly appreciate all the work that goes into this. This is an important report. It is important information for us in the nonprofit world, and we couldn't do it without the support of all these people and organizations. So with that, well, that slide is still up there. I'll let you look at that while I introduce Melissa. Most of you know or know of Melissa Brown. She's been doing this presentation for us for, I don't know, many years, ever since I can remember. Um, but
2003, I think.
I'm, how many?
I think it was 2003, the first year Jim convened a group in
There you go.
Cincinnati.
Yeah. So I'll just give you a quick intro to Melissa here. Melissa helps charities turn knowledge into action. Drawing on more than 30 years in the nonprofit sector, Melissa knows what drives charities to deliver on their mission. She uses research about giving trends and donor motivations to help nonprofit organizations plan effective fundraising. Melissa began work in 1989 with the annual fund at the Folger Shakespeare Library in Washington, D.C., which is very cool. She also
Expensive.
worked at the Arthritis Foundation National Headquarters, an Indianapolis-based project called the Homeless Initiative Program, and what is now the Indiana University Lilly Family School of Philanthropy. While with IU, she edited 10 editions of Giving USA, so she knows this material. Since 2011, Melissa S. Brown and Associates has aided clients globally, including through teaching online for the fundraising school. Other services include presentations, proofreading, in-person and online training, surveys, and program evaluation. Nationally, she volunteers on the AFP Research Council, thank you for that, and the Association of Philanthropic Council. Locally, she is involved in a neighborhood food drive, the Master Gardener program in her county, and an alumni reading group for her college. She holds degrees from Reed College in Portland, Oregon, and the University of Pennsylvania in Philadelphia. Melissa and her historian husband live in southern Washington state where they revel in the mild climate and being near to family. Her own giving focuses on um, climate change mitigation, the arts, and social justice. So thank you, Melissa, and welcome, and take it away.
Thank you, Lauren and Ken, for those great introductory statements, both about the program and about me. So I appreciate that. Jody, when you're ready, we could look at the first slide. We're going to look at the trends in giving and the top line finding. So this slide shows total giving in inflation adjusted dollars. That's in the bars. Don't worry about the little black line. That's current dollars, and it's just what a dollar bill looked like back in 85 is the same as what a dollar bill looked like in 2025, even though the spending power was completely different. So let's look at the bars. The gold bars are inflation years, and the gray bars are years without, not inflation, recession years. And the every year it has inflation, frankly. The gold bars are recession years, and the gray bars are years without a recession. Any month, no month in that year was considered to be in a recession. So this is the best way to look at changes in giving over time. You want to adjust for the spending power of money. In your shop, you're probably going to just look at the current change, which is year on year over time. But when you look at trends, what you want to use the inflation adjusted values, and those are in the publication that Lauren mentioned, the full book that will come out in July. So top line finding, giving increased by 5.7%. You probably saw this last week when the publication was released. It's 617 billion, 617.2 billion. This is the first time it's been over 600,000 in current dollars, the little black dots. But it is not the highest ever. The highest ever was actually in 2022. Why? People had extra money because we weren't paying for dry cleaning or community, and some of us got government stimulus checks, and the need was so high globally. So Americans over time, and I won't spend a whole lot of time going over the little peaks of this graph, but almost every peak corresponds to some urgent need, either in our country or globally. Um, and then we sort of settle back into a pretty steady rate of growth. Again, 5.7% increase in current dollars. If you just took the money, and did the arithmetic. But if you adjust for inflation, it's a 3% increase in 2025. I want to point out that over time, 3% is pretty much on point for what has happened in changes in giving. If you look at the slopes of those bars, from the middle of the end of the recession, the Great Recession that we had there in the mid 2000s, that bottom point in the last gold bar there, that's 2010. And if you look at the slope of that increase, it's been a pretty straight line with a couple little blips up when we had some dramatic events, but uh, that whole slope is a 2.8% increase, just if you average the rates of increase. So 3% is right in line with that. There's another way of measuring changes in the value of dollars over time. It's called compound annual growth rate. And if we look at the compound annual growth rate since 2010, it's 2.9%. So 3% is very consistent with the current historical period since 2010 when we came out of that terrible recession. And we're just sort of trending upward at that same rate unless something extraordinary happens. So again, the COVID crisis, and we see that in 2021 and also 2022. So 617 billion and a 3% adjusted for inflation increase, very consistent historically with what we've seen at least since the end of the Great Recession. Jody, if we could have the next slide, please. So where did all this money come from? Well, if you've been here before, you know it came from individuals. And it has come from individuals since before I was born, although the way individuals are making their gifts has changed somewhat. So individual giving was 394.2 billion. That was 64% of that 617 billion. 64% is the largest share, and it has been the largest share again since 1956 when the publication began. However, we know that a number of wealthy individuals, and maybe some of a moderate income, are using foundations, putting money into DAFs, for example, in community foundations, using foundations as a way to make their gifts. So foundation giving has grown faster than individual giving. Individuals put it into the foundation, it appreciates in the stock market. The foundation is required to give away 5% if it's a private foundation. Many community foundations follow that rule too. And so an increasing share has come from foundations over the last 40 years. And it's now at 19% or 117.15 billion. So foundation giving is growing faster than individual giving, but don't forget that roughly half of that foundation giving is actually individuals who are using the foundation as the way to make their gifts instead of making it through their own private accounts, whether it's their stocks or their checkbooks. So the growth, well, we'll talk about the changes in rates of growth, but foundations have been gradually increasing their share of the pie, even as the pie has been increasing overall, in part because, as you know, people with enough net worth use foundations as a giving vehicle. We have also seen an increase in bequests in the past decade or so, both as a share of the total and, of course, as and the dollar value. This year, bequests increased quite a bit to 62 billion, and that's 10%. 62 billion, 617 million. It's a hair under 10%, but we'll call it good. It rounds to 10%. Well, no, I'll do it now. The bequest share has gradually been creeping up also, very gradually, since 1985. It used to be back in the 8% range, then it went up to the 9% range, And in these last couple of years, we've seen some tremendous growth in bequests, 2023, 2025. So it's now 10% of the total. People have asked if this is the beginning of the wealth transfer. The Giving USA researchers are very cautious about that. We know people's estates are increasing in part because of the stock market when people are invested in the market, which many people who are subject to estate tax are. So it could be appreciation in assets. It could be a slight increase in the transfer of wealth, but it's hard to disentangle how much. But bequests are sitting at 10%, which is one of the highest percentages they have been in recent times in the last 15 years. Corporate giving also increased in 2025. It's now 7% of the total. Many people who in closely held corporations use their company as a way to make their gifts. In fact, I use my company, my little tiny one-person company. I make philanthropic gifts through the company rather than through my personal account. So sometimes that would appear, depends on tax status and stuff, but sometimes that would appear in corporations. And in fact, corporate giving has slightly increased as a percentage of the total over time. So sort of to summarize, the pie is getting bigger. They don't make it any bigger in the book, but it is getting bigger by about 3% a year, adjusted for inflation. And individuals are making choices about how to make their giving that is starting to, that where um, foundations and corporations and even through bequests are each growing slightly faster than giving from individuals. So even though the pie is bigger, the share that comes from individuals' tax returns, 1040 tax returns, is 64%. Some people might remember when it was 80%. At that time, foundations were like 6%. So you can see automatically the slices change slides. Um, are there any questions, Julia?
Yep, there is. So the one question for you, Melissa, the question
Sure.
is the 10% bequest realized bequests?
Yes. It's that all of this is based on tax returns. So it's from the donor side, the tax return the estate has to have been closed. From the recipient side, it means they might have received a check actually 2 years before because it takes a while for the estates. Sometimes, they disperse and then they file their returns.
Yeah.
That's a good question.
What about
Thanks.
the foundation giving question, Julia?
Oh, the question is what percentage of foundation giving is corporate foundations?
None of it, because Giving USA takes the corporate foundation giving and puts it in the corporate side. So if it says corporations and it's like the American Express Charitable Foundation or the Bank of America Foundation, those are two I can remember that have foundations, it goes on the corporate side. Where does DAF giving, Maureen? Okay, this is the perennial question. DAF giving only appears in Giving USA when the donor funds the DAF. So if I created a DAF and I took it, or even if I didn't take a deduction, but when I fund the DAF from my personal accounts, it comes out of individual give. It goes into individual giving on this chart. If my friend who's planning her estate decides to create a DAF through her will and ask her heirs essentially to become the advisors, so her estate, and it closes through the bequest and the money goes into, let's just say, National Philanthropic Trust, then it goes through a bequest. There are companies that create DAFs, often in their local community foundations where they have offices. So then it would show up in corporations. And there are even some foundations that create DAFs. I was thinking of California wildfires last year. Um, the some of the big foundations wanted to support recovery and rebuilding, and they didn't know the terrain very well, so they made a DAF at a community foundation, took advantage of the advisors at the community foundation, the people who knew the area, and then directed their gifts. So it will show up in the entity that makes the gift to the DAF. Money that's transferred from DAFs is now in another charity, and then the DAF is created, and after that, it's a transfer from one charity to another, and it doesn't show up in Giving USA again. Because it's just like United Way. You give your money to United Way, they allocate it usually within a year. It's just a transfer from one charity to another. In the DAFs, you put it in a DAF, most staffs are distributing about a fifth of their assets each year, a 20% payout rate. So it's just reallocating money from one charity to another. Next slide, please. Thank you so much. So where did all this money go? Well, we now have 9 subsectors and one other category. And I could sit here and read you all the numbers, but you'll get the slides. And you need to know where your organization sits. So the subsectors are created by something called the National Taxonomy of Exempt Entities. You can check on Candid if you don't know where you sit, and they will tell you where you have been assigned, essentially. So education is pretty clear, but it also includes scholarship funds, sorority, the 501c3s that are affiliated with sororities and fraternities, and some other organizations that are studying education as 501c3s, not as membership groups. CASE wouldn't be in education because it's a membership association. Giving to grant-making foundations, that includes if I made a gift to the local community foundation, if somebody passes away and leaves their estate to create a foundation, that's gifts to grant-making foundations. Human services is one of the largest subsectors. I'm now going back to the, basically 3 o'clock to 5 o'clock on the slide. It's one of the largest subsectors in terms of the number of organizations, and it is now 15% of the total. It used to be in the 10% range, and this is one of the biggest changes I've seen since I started working on Giving USA in 2001, that human services giving has become a larger share of the total and even surpassed education giving. And this has been true now for the last 5 years. So the Jewish federations, along with all the other entities that collect money and distribute it back out, are in public society benefit. So Jewish federations, Black United Fund, United Ways, the DAFs that are not affiliated with a specific institution. So Stanford University has a DAF, and if you funded a DAF at Stanford, it would go in education. But National Philanthropic Trust, all the donor advised fund sponsors that have essentially corporate names, Schwab, Vanguard, Bank of America, Fidelity, all of those are in public society benefit. Some other things as well, but that's the sector that holds, if you will, the organizations that collect funds and then redistribute that money out to a number of different kinds of charities. And the funds are not themselves foundations. They're not considered foundations. Community foundations are in gifts to grant making foundations. All the other types of entities that distribute funds out to numerous types of charities are in public society benefit. So even though it might have been in human services or it might have been in foundations, in some discussions, the first category according to the NTEE is public society benefit.
Melissa, there is a
Mhm.
question about family foundations
Yep.
and family foundations that basically operate for individuals, for an individual. Do
Mhm.
they fall under the category of foundations?
They are, if it is registered as a foundation, it files a 990 PF, private foundation. It will be in gifts to grant making foundations, yes. And then the gifts to the foundation would be on this slide in that kind of, I don't know, what color is that? Chartreuse color. And then on the prior slide, the gifts from those foundations would be on the grants, grant making from foundations. Just to reiterate, once money's in a DAF or a United Way or given to a congregation even to give away to the community, it's already in a charity and it doesn't show up on this distribution. Goes into public society benefit to begin with, and after that, distributions do not show up. Heck, it's a lot of money, actually. It's almost 10% of the total these days. but is not tracked in Giving USA. So religion has, just as with individual giving, religion seems to be shrinking as part of a growing pie. That's not because people have stopped giving to religion, although many fewer people are participating in worship services. It's because other subsectors are growing faster. One of the fastest growing subsectors in the last, at least since the recession, since 2010, has been human services. And it has been growing so quickly that it is now in second place after religion. It used to be in fourth. Um, so that is a significant change since 2001, and something that I think bodes well for the type of work that many of your organizations are doing. Health has remained in the 9-10% range where it is now. International is at 5% of the total, which is slightly increased over where it was when I started when it was 3%. Arts and culture and humanities and environment are both at 4%. And then there's this new thing, new since 2003 or 4, called gifts to individuals. Well, wait a minute, you say. You can't make a charitable gift to an individual and deduct it. Yes, unless you are set up specifically as a foundation to provide grants to artists, for example. That's where it started. And now a large part of that amount, that 26 billion, 25.7 billion, is actually pharmaceutical products that are being distributed by company-run foundations to patients who meet certain criteria for medicines that they can't afford, but they need it for their well-being. So that's now 4% of the total. And it's basically all corporate giving now to support the health of people who qualify for the medicine that the pharmacy company makes. There's a dozen or so pharmaceutical companies that have created foundations, not to give money, but to make these products available. So that's also 4%. As a consequence of growing faster in human services and in gifts to grant-making foundations, and then the religious share is shrinking. It's 23% of the total now. I hear a question.
Yep. So one question. So the question is, public television, is that in the public society benefit or is it in the education sector?
It's interesting. Media like that is in the arts.
Okay, thank you. Then another question, what sector is legal lumped into?
Legal services like legal aid would be in human services. If and when you buy the book, there's actually a table of the National Taxonomy of Exempt Entities. You can also use the search engine NTEE for charities, and usually a 2-page summary will help you find where you are. There are many organizations that do lots of different things. So you could overlap in health and education, or human services and health. Usually I advise to look at where most of the money, the programmatic expenditures are going, to look at so that you can look at your peers in terms of the fundraising side. I see a lot in the chat, but I haven't opened it up. Are there other questions?
Since human services has increased significantly, are certain types of organizations decreasing? Which I think you just kind of covered a little bit there.
Yeah, it's actually gifts to grant-making foundations this year decreased, but it increased by 36% last year. So it's sort of just kind of returning to its normal level. So no, not really.
And then what's been the shift in higher education philanthropy given the political context? We can see it increasing and or decreasing given public confidence.
Sure, that's a really great question. That report is coming out soon from the Voluntary Support for Education Survey. I'm not at liberty to reveal their news. It's their news. They have a full report coming out in the next few weeks, I think. They did do an executive summary in March, and there was an increase in giving to education, but I don't think they put it specifically in to higher ed in the political context. So that I don't think they disentangled the many drivers there. The stock market drive often increases gifts to education by quite a bit. Of course, people have things that they hope education will achieve, and they do or don't support certain institutions. So that's a complex mix that's still being sort of sussed out. I do refer you to the case report, voluntary support for education, their executive summary, and also it'll probably be summarized in Giving USA as well.
And then one last question, Melissa.
Mhm.
Will we receive a one-page slick as we have in the past that sums up all of this crucial information?
There is an online infographic at givingusa.org. I don't get to make my own slides or anything. This is all a Giving Institute, Giving USA function, and I know they have made that available. Some of the Giving Institute firms have done that as well. I don't know, Lauren, has Grants Plus made a summary?
We have not, we use the Giving USA
Okay.
information. Yeah.
Yeah, there is another firm. May I mention another Giving Institute firm?
Oh, yeah, for sure.
Okay, sure. So the firm Kramer and Associates that's in Columbus has their own take on this. I mean, it's not they didn't change the numbers, but they made it slick. So um, if you wanted to look them up, I'm sure they have a different format, if you will, with different colors.
Thank you.
Okay, next slide. We'll look at some of the changes in and what these mean. Now, I only put in the current dollars. Again, the dollar in my pocket now looks like the same dollar that my dad had in his pocket the year Giving USA was created. So this is not in any way adjusted for inflation. Um, and inflation was roughly 2.7%. So you can take these numbers and deduct 2.7%, at least for the gray bars this year. And you'll be pretty close. And there's gold bars and gray bars. The gold bars are on the top. The gray bars are just underneath those. And we show 2 years, and then we show the 2-year average rate of change because it's the trends that matter, not specific, especially in some types of giving, it's not the year-on-year change that matters. So overall, in 2024, so last year at this time, there was a 2.9% current dollar increase. And that was roughly equivalent to inflation at that year, a little bit above inflation. There's a 5.7% increase this year in current dollars. And over those 2 years, it works out to 8.8% growth in 2 years. This is the kind of thing that you can use in your organization and say, if I go back to 2023 and I take 2025 and I calculate the change, does it come out anywhere close to 9% in current dollars? If it's higher, great. If it's way lower, I wonder what's going on. And it might be the subsector you're in, but it might be something else. One of your major donors might have walked away. That happens. One of your major foundation funders might have changed their priorities. As long as you could pinpoint what's going on, that's great. If you don't know what's going on, it's a challenge to you to figure it out. And that's one of the ways that Giving USA is used at the institutional level. Individual giving grew again by 4.1% in 2025. That's the shorter gray bar there. And it grew by quite a bit more in 2024. So it's a cumulative growth over those 2 years of 13%. Again, in current dollars, because then you don't have to adjust for inflation. You just look at your books. You don't have to do any funny arithmetic. You just calculate the rate of change. And again, I wonder what's going on. Gosh, ours only grew by 1% over those 2 years. Are we losing individual donors? Are they making more gifts through DAFs that don't even show up? Are they using foundations? I just did a big project for a client and combined each member of the household, the company that was matching their gift, the DAF that they were using to make their gift, in some cases also a family foundation, so that for the household, I could get all the gifts that they leveraged, not where they asked their friends, but all the gifts that came from their own pockets of money, if you will. It was a revelation to the charity that their individual giving wasn't really declining. It was just shifting how the donors were making their gifts. So that could be something that you would like to do based on this. Foundation giving did increase. Foundation giving always increases when the stock market is strong. And in 2025, the stock market was going gangbusters. So it went up by 5.7%. Again, that's 3% if you take out the 2.7% for inflation. And it's over another year of growth. So it's been growing over time. And you're going to look at that bequest number and say, oh my word, what's going on? Bequests fell by 27% to 28% in 2024, and they increased by almost 20% in 2025. Whoa, we're going to get a lot of bequests this year. No, nobody times their death in order to make a charitable bequest. The bequests happen when they happen. The best thing we can do is invite people to leave us in their legacy plans, however they choose to do it. This is only charitably deducted bequests through estates. It doesn't include life insurance payouts. It doesn't include being the beneficiary of a retirement plan. It is only for the part that comes through the tax return. And all those other instruments are out there, and charities are receiving those instruments as well. And because they're not on the tax return, they aren't in Giving USA. So you, again, might consider the different ways people are leaving you in their estates and figure out a way to track those. Are you getting QCDs, qualified charitable distributions? That's not really an estate gift. It's a gift in life, but it doesn't show up on a tax return either. Um, so it doesn't yet show up on a tax return. It will in a couple of years. The laws have changed. So think about when you're entering your gifts, if you're going to code the instrument that somebody used, it can help you figure out, oh, yes, we're reaching individuals and they're making gifts now from retirement assets. Oh, yes, we're reaching individuals and they're using their family foundation, and do the coding to track where the funding's coming from. And then corporate giving increased in both years. And again, that's related to corporate profits, and also more people are using their corporate assets as a way to make gifts. I see that all the time when I analyze gift records. Uh, the company gets the hard credit, if you will, because the closely held company is making the gift on behalf of the owner. I think I see a question there.
You
Should I
do,
stop?
you do. So if an individual giving increase and decreases in bequest, do they wash each other out? So they wash each other out. Can we say that the increase in individual giving in 2 years is due to the increase in foundation, meaning DAF?
No, no. Because there's this inventor named Rube Goldberg who had these very complex machines that where all these parts interacted. It's like that. So it is really hard to disentangle. Um, if you followed a group of donors over, I've always wanted to do this, by the way, a cohort analysis. So everybody who started giving in, let's say 2010, let's see what they do, what instruments they use, how often they give, how good we are at renewing them. Yes, then I could disentangle it. But at this level, where we're using tax return data, it depends on who's itemizing. There's ways to fill in the gaps when people don't itemize, but it depends on who's itemizing. It depends on the stock market for all these instruments. The value of the assets is key. It depends on who's been asked to make a major gift in a given year, all of the work that we do in special initiatives and campaigns and so forth. It depends on um, how long people live. The wealth transfer was initially calculated in the late 1990s when the lifespan was, let's say, 84 years. Now the lifespan is increased dramatically. So the people are using their assets longer, their estates are smaller at the end. At least that's what Russell James says, one of the foremost researchers in this. So it's not a direct change. It's a very complex set of opportunities for us to ask money to support our mission, ask people for funding from whatever resource they have to support our mission. Sorry, I can't be more precise, but there's just no way to disentangle it all. And on the donor behavior side, we know that people are I mean, I look behind the couch, right? All the change my husband dropped, and then we go put that in the jar at the McDonald's for the Ron McDonald House. So people are looking for whatever they can do to help out when they can. So next slide, please. Okay, this one's very complex because it has so many lines, and I'm not going to read through it all, in part because I'm almost out of time. I got a few more minutes here. But I do want to point out that all of the subsectors increased, both in the gold and the gray bars, except foundations. That is gifts made to foundations. So in 2024, very long gold bar, way out there. I can't even, it's so small I can't read it, but it's out there. And then in this year, it looks like giving foul by 16.7. Oh my gosh, the high net worth people aren't funding their foundations. The savings account is dropping. No, it was so high in 2024 that a 16.7% decline is a tiny part of the total. And if you look at the 2-year growth rate, it comes out to 14%. You know, the 2-year growth rate for human services is 13%. 2-year growth rate for education is 16%. I'm 17. 2-year growth rate for foundations is 14%. Public society benefit, and that's a DAF function, and I'll explain that in a minute. Health up 6% over 2 years, international, and so forth. So environment and animals is one place where we're seeing a large growth that could be related to national changes about environmental priorities. I can't say that for certain because I don't know what gifts are included in there. But I do know that lots of people are participating in ways in the environmental movement that they might not have in the past. I mean, that's my personal observation. That's not from Giving USA, but that big a jump over 2 years in that subsector, which is very small, is it's indicating to me that there's something underneath that's motivating a lot of people to give. Now, let me go back to the public society benefit thing about that big rate of growth there in a couple years, 25%. Public society benefit is where the DAF recipients sit. We had a major tax law change in 2025 that made it so that DAF gifts from 2026 on are deducted differently. Gifts to DAFs are deducted differently. People pre-gave. Tax stock market was up. People said, "Oh, I have assets. I know that I want to continue to make charitable gifts. Oh, the benefit of a charitable deduction is going to decline in 2026. I'll be a little bit more restricted on how much I can deduct. I'm going to pre-fund the DAF right now, even though I won't be making the gifts for 2 more years. I'm going to stick it away now so I can maximize the tax deduction." We have seen that many times when a change in tax deductibility is announced. It's well publicized. Financial advisors are out there saying, "Hey, start bunching your gifts. Hey, put money in your DAF now so that you get the maximum tax deduction." So that's part of what's going on there with that 25% increase in 2024 and 2025 combined. I see two more things coming in. Julia, you want to?
Yeah, so the question is, can you remind us why in 2024 the foundation was so high?
I don't remember. And yes, I have the book, but I was on vacation when this report came out and I didn't go back and read the book because I was with my family. I'm sorry, I don't remember.
And then,
I
then,
could look it up
then
when you all send out the notice. I'll have an answer for you. How about that?
sounds good.
I'll
Thank you.
look it up. I got back last night at 11 o'clock. I'll look it up this morning.
So the next question is, within international affairs, what types of orgs are these? Are they local organizations working on a global activity in their region,
Yes,
or is it organizations doing work abroad?
yes. It could be anything from an international student exchange program. In my community, I grew up with something called ICYE, International Christian Youth Exchange, had affiliates all over a town of 10,000. We were raising money to send a kid from our high school into a different country. So yes, that's international. It's also World Vision. It's all it's also anything to do with the Nuclear Threat Initiative, international um, peace efforts. Um, People offering aid and relief and rebuilding after a disaster through an organization that's formed to serve internationally. If I give to the American Red Cross for a disaster that occurs in another country, that's human services. But if I gave to the International Red Cross and Red Crescent Society in Geneva, that would be an international gift. So it gets very finicky how the subsectors are assigned. But in general, if the even if it's a small organization that's specifically to support orphans in another country, if the way the founding documents say that we exist to support children in orphanages in Rwanda, then that will go in international, not in human services. I hope that helps.
Thank you.
Sure. The next slide, please. So, giving needs a context. And I will tell you that back when I started in this sector in the 80s, giving was below 2% of gross domestic product. It had fallen below 2% of gross domestic product in the 70s. We had somebody in the White House that was widely derided. We had an international war that was very frustrating to many people in this country. There was an oil embargo. The stock market wasn't growing very fast. And back in 72, 3, 4, 5, giving fell below 2% of gross domestic product. And it stayed below 2% onto the mid 80s, as you can see on this graph, until 1999. And in 1999, Bill and Melinda Gates put 20 billion, sorry, nearly 20 billion into what was then the Bill and Melinda Gates Foundation. And there was this thing called the Giving Challenge, and there were lots of people in the tech industry here in this middle period between 95 and 2000 who were saying, "Oh gosh, we have so much money, we don't know what to do with it." Tax advisors were saying, "Give it to charity." So they put it in foundations and most of them some other thing. So then giving rose above 2%. And with the exception of that recession, the 2007 to 2010 recession, right here, where it fell down to 1.9%, it has basically stayed above 2% of gross domestic product, or at or above, since 2000. We'll just round there because it's easy, because the data are there, which is great news for the sector. One of the things that shifted, as you have heard, is that a higher percentage of this 2% is coming from households with huge net worth. Huge net worth. And you might have heard of some of the AFP initiatives. The Generosity Project is another one to try to encourage more households to look behind the couch cushions and make charitable gifts whenever they can afford them to support the missions that are important to them. It doesn't have, it's the cumulative giving of tens of millions of households that will make a difference, not just the people whose names we all know who get headlines for making gifts. It's the tens of million households collectively working on an issue that actually has made huge differences in many of the issues in our country. The mega people are sticking money in foundations and giving it away at 5% a year. They get the deduction. It adds to the gross domestic product here, the 2% of gross domestic product, but it isn't necessarily flowing to the organizations that we work on, at least not very quickly. So one of my personal goals is to help people realize that they can make a difference, even if it's $5 at a time. Because your $5 and my brother's $5 and my neighbor's $5, that starts to add up into billions, actually, billions and billions. So that's tell your donors that every penny counts or every quarter counts. I have a couple more graphs and I'll just show them quickly. The one with S&P, please. Okay, so I recognize a graph on two axes and two different colors of lines, and oh my gosh, there's dots and there's this all like, what's going on? The basic point here is that the S&P line is the gold line. That's the gold bars, that's the money. It goes up and down. And this is all adjusted for inflation because it's a graph back to 85. Up and down, up and down, up and down. Oh, big up, big up here. This is giving these little dots. Well, it goes up and down, up and down. It does not move at the amplitude. The lows aren't as low. These aren't go down as deep, and the highs aren't as high. Doesn't go up as much. It goes up, but it doesn't go up at the same spike. So giving follows the S&P. It's very closely linked with the S&P, but it is not lockstep. So if the S&P, and you can see that it appreciated here, this is this big, huge jump here in 2025. And yes, giving went up a little bit, 3%, but not anywhere near what it did with what happened on the S&P. So tell your boards, even if the stock market starts to wobble or, God forbid we have a big decline, giving will still will continue. It will grow when people think their money will be well used. People find a way to support charities when the mission matters to them. We saw that in the spikes in 2021 and 2022, in 2005, in 2001, and many other years with crises and global needs. So giving is a fundamental way for people to respond to urgent needs that appeal to their hearts. And the stock market is an asset base. It is not the only one. People find ways to support things, even if the market actually here tumbles. Yes, it gave a little bit less, but people still gave. Next slide, please. So this is individual giving as a share of disposable personal income. That's the income that we have available after we pay taxes. Nothing else is taken out of it. It's just after we pay taxes. So one of the things that's happening is that tax rates have come down, making disposable personal income, especially for people with high income levels, go up. Does not mean that people are giving less. They aren't. They're giving more. It does mean that income is increasing in part because tax rates came down and then they stayed down again with the act that was signed in the summer of 2025. So it's not a measure of generosity. It's an interaction between generosity and tax rates. I hope that's clear. Don't look at this and say, oh my gosh, people are giving less of their income. Well, some of them have a lot more income now because their tax rates changed. Their tax rates sort of around here. Their tax rates, the the Jobs Act, tax rates declined, and so their disposable income went up, which means the percentage that they didn't change the percentage that they gave necessarily. So, the total amount that they gave. So it's just a lower percentage of income. And the last slide, oh, two more actually, quickly. I'll go quick. Corporate pre-tax income. Corporations give from what their revenue, basically. And if their revenue is strong, they give more. When their revenue is wobbly for some reason, they give less. And it's been around 1%, up and down. It went up in 2001, over here. There were some tax law changes that they pre-gave back here in the 80s. They knew the tax law was going to change, so they pre-gave. But it's been around 1% basically since the recession, the Great Recession. And that's pretty reliable. That's been very stable. And corporate taxes, this is pre-tax profits, so it's really tied to the bottom line after expenses and revenue. Last slide, please. All of this is occurring in the context of a growing nonprofit sector. Now, about 500,000 of those organizations, not quite 500,000, actually have a big enough revenue to actually file the full 990, not the postcard. So a million are so small that, yes, they're raising money from their friends and their relatives, but they're not necessarily in your competing directly with you. So it is an increase. We have about a 3% historical rate of increase in giving. We have about a 5% historical rate increase in the number of organizations. There are organizations that close over time, absolutely, and it takes 3 years to catch up. So, but just keep it in mind that the sector continues to grow even as giving grows because people think charities are the right way to help solve community problems. And that's why we do this work. We love it because it helps people realize their dreams and fulfill their purpose. End of lecture or preach. And then we have questions now.
No, there are no other questions right now.
Okay.
Wait, I apologize. I apologize.
Oh, I knew there'd be some if
No,
we
no,
gave enough
you already
time.
got it. You got it. It was education philanthropy. Nope, we're good. I'm so sorry.
Was
Okay.
it international? Did we get the international affairs question? Within international affairs, what types of organizations is this? Is this local organizations working on global activity in their region or organizations doing work abroad?
I think
Both.
she said both, right?
Yeah,
Oh, sorry about that. Okay.
No,
that's
no
okay.
worries.
It's okay.
So, some of my interest, Melissa, would be, and I'd love your take on this. What do we do with this information now?
Sure.
You know, how do we
Sure.
make this real for ourselves? People always want to know where their organization fits in this
Hmm.
picture. But now, how do we take this information and do something with it that makes sense going forward?
Sure. I have sort of four takeaways, if you will. One, giving is over 600 billion and it has been increasing every year by about 3% since before I was born. Boards, don't panic. This is a robust sector. We have to do our work. It's not like money just falls on us from heaven like manna in the Bible. We have to do our work and uh, but people are generous and they respond when the appeal is compelling. So do it, right? Don't think the sky is falling. No matter what happens. It's horrible, it's stressful, awful things happen, but we have to keep doing the work. The stock market is the key driver. Watch the stock market. Work with financial advisors who advise people who are invested in the stock market. Community foundations are increasingly reaching out to financial advisors to educate them about philanthropy. There are advisory, not, what's the word I want? Professional societies of financial advisors. You have some of the great ones right there in Cincinnati. Hi, Chris Beck, or Christopher Flores too. Chris Beck's in Atlanta. Um, so the work with financial advisors to help them understand that even if they have a little bit less to advise, of course, they're interested in that size of the portfolio, but people realize their purpose and vision in life through philanthropy. It's not just about the money. Um, and it's about how people feel about their money and the use that it's serving in the world. So helping advisors understand that when the market's strong, there are tax advantages, certainly. You avoid capital gains tax, if you give. But it's also about helping people find out what's important to them. And that's an important role for financial advisors as well. If you don't know what people want to do with their money, why help them in the business at all? So that's the second takeaway. The third takeaway is that the nonprofit sector is huge. You don't see that in this book. It's 10% of our employment in this country. 1.6 million nonprofits, not counting all the congregations that don't even have to register. Some do, but a lot don't. So maybe 1.8 million organizations in this country that are doing community work some way or another, maybe locally, maybe globally. And it's 2% of our gross domestic product, 10% of the employment, 2% of our gross domestic product. This merits attention and investment from everybody. That's why we show individuals, corporations, bequests, foundations. So when you talk to your board, it's not just the corporations that support the nonprofit sector. Many board members think that that's where the money comes from, because that's what we hear about. That's who advertises. But have them look at that pie chart and think about who do they know who might own a closely held company, who might have a family foundation, who might look at your own list, who's been giving 5 years or more, who might consider making a bequest. Individuals make all the philanthropic decisions so far. AI has not entered into it as far as I know. And we need to work with individuals and ask them from all of their pockets. Whether my mother with her retirement funds, people who own stock, people who have a foundation, we need to look at the pie chart and say, where does our money come from? Do we understand where it comes from, which pockets of their assets and wealth are their assets and income our donors are working from, and then give them a chance. So that's sort of the holistic approach from the pie chart. And the last takeaway is that long term, it's the long term changes, not the year to year changes. So I actually you can buy the book, you can get the data tables, and you can put them in Excel, and you can figure out the year on year changes in your subsector and say, huh, look, our subsector has been growing by 9% a year. You can use the inflation adjusted. You don't even have to do the arithmetic. It's in the tables. They're easy to block and put in Excel. You can see the percentage change in your subsector, and you can say, huh, our organization is maybe not quite where we'd like it to be. Let's do an analysis. Let's talk to somebody who knows, who consults in this area, or has a deep expertise, whether it's a friend or a colleague, AFP colleague, and say, what is it about our development program that isn't resonating? Other organizations in our sector, or even, I mean, Florida does a whole statewide philanthropic report. I know Ohio's thought about it, but it's never really gelled. Um, to say, huh, what is going on? What is different about where we are or what we do that we could change to help us get closer to the national average? And if you're above the national results, super. Good on you. Figure out what you're doing well and keep doing it. So those are
Yeah.
my
Thank
four
you.
takeaways.
I think
Sure.
those are great. And I just want to sort of double click on one thing that you said, which is I think that it's important that nonprofits understand the mid-level to the small donors right now, that they can really make a difference so that
Yeah.
those are not become your last priority. And likewise, the bequests, I have to say so many organizations that we encounter really spend not very much to no time on
Mm,
bequest giving, and yet it can be such a game changer, and it doesn't have to be a big, huge effort. You don't need a staff member
hmm.
who's only in charge of that. Little nods and notices on
Right.
collateral can make the biggest difference there.
Right. Yeah, you can reach out directly to people who have supported your organization for 5 years or more and say, gosh, you've been one of our longest term supporters. I'd love to have a chance to talk with you about how you see being involved in the future. And then you kind of meet with them and see where, oh, we're reaching the end, or oh, we're so excited about you. And then you start, Russell James says, talk about tax advantages. I like to talk about legacy. People don't like to think about death. Estate plan, oh my God. But
Right,
you are an important donor. You have a long-term impact here. How can we help you continue to have a long-term impact?
right. I'm seeing a lot of wonderful thank
Oh,
yous.
I'm great. Thank you. I'm glad to be helpful. People seem to have
Jim,
allowed an hour.
yes. Jim Yunker said thanks to AFP Cincinnati and Grants Plus for continuing this annual presentation featuring Melissa Brown. So thank you, Jim, for giving us this wonderful foundation. Um, any other questions that we do have time here
Yeah,
to answer additional questions?
there's one question just
Mm,
confirming, and that is, Melissa, that growth is mostly in the, quoting, the postcard NGOs. Is that correct?
The number of NGOs, yes. So postcard, and those of you who this sort of jargon, every nonprofit has to file an IRS Form 990 below a certain level of income, and frankly, I don't remember what it is, but 50,000 say, you only have to file a postcard that says, yes, we're still here. Above that, you file a simplified Form 990, and then once you get above a certain level, you actually have to fill out all the boxes in the longer 990. So the at least a million, maybe 1.25 million of the nonprofits are at the postcard level, 50,000 or
mhm.
less, say 75,000 or less. Yeah, small.
Maybe we could talk just for a second while we've got time for those that are interested on some of the things that we're focusing, some of the things like in institutional giving. So that would
Hmm.
be corporation giving, foundation giving. On the corporate giving side, I'm always interested to see where corporate giving shows up because oftentimes where it is and where our experience on the ground is feels different. But this time we had slow growth in corporate giving, even though we had record profits in corporate
Hmm.
giving. And our experience on the ground, and I'm curious if others are experiencing this too, is that it feels tighter than ever. You have to know someone, you have to show a business impact, all kinds of things like this. Maybe you could comment on how you see corporate giving based on the data and if that aligns or not with what you
Yeah,
see.
the data say that corporations are continuing to give at 1% of their pre-tax profits. Um, my anecdotal evidence says that corporations are treading extremely cautiously,
Mhm.
and that what you're seeing in terms of funding being tighter probably applies to organizations that are used to corporate support, but are everybody's worried that they might become a target.
Mhm.
Um, and I have
Being a
heard,
target of the administration because of policies and things
yeah,
like that.
or
Mhm.
local people who
Okay,
share some of those goals.
got it.
Um, so, um, and certainly we've seen that in some of the big national corporations that have stopped supporting certain public events because they don't want to be
Mhm.
smeared by very
Mhm.
vocal people who disagree with those priorities. Um, so the corporations that I've heard about are restructuring their giving priorities to focus on things that are very safe
Mhm.
in the current political environment,
Mhm.
or they're restructuring their giving processes to decentralize it so it's not corporate goals, it's employee goals. This is where
Interesting.
you know someone.
Yeah.
Um, so local committees that make grants very locally. Um, Instead of having corporate giving officers, they're having grants. I mean, yeah, grants essentially go to match employee gifts. So they can sort of say, oh, no, it wasn't us.
Mhm.
It's our staff that's picking these. We're just following, or we're supporting the volunteers where our staff are volunteering and we're, saying it can only be in education and youth development or something so that
Yeah.
it's non-controversial.
Yeah.
So that's what I've observed. That
Yep.
is not giving USA data.
Got it. What about foundation giving then? One of the things, and I know there's more data to come in the chapter when it comes out in July.
Hmm.
But there's sort of this national trend of general operating, multi-year support, things like that. And yet on
Hmm.
the ground, we're not seeing that as much.
Yeah.
And so I'm always advising folks to talk about that and to bring it up to their
Uh-huh.
foundation
Hmm.
friends and colleagues. Curious what, the data tells you about maybe what organizations should do moving forward with their foundation gifts.
That's a really good question. The Foundation Center merged into Candid. This is a little backstory for those of you who haven't been doing this since 1989. Um, the Foundation Center used to issue an annual report about where foundation grants were going, and it helped disentangle a little bit how foundations were changing their priorities. So, education, higher education, is one of the top recipients of foundation grants. Again, probably since before I was born, although the data don't go back that far. Candid has shifted how they do their work, and that report doesn't come out anymore. So it's really hard now to get data, at least not very frequently. It's really hard for me to get data, unless I analyzed it myself, about where corporations are giving and how they shift their priorities over time. And even if I could get data, the data I would have would be from 2023
Mm-hmm.
because of the lead time. The PFs are filed in October, 990 PFs are filed in October. So it takes a while for the IRS to consolidate everything, and then it becomes publicly available from Candid, and then um,
Mm-hmm.
and then there's some analysis time. So it's a little early to be able to tell from data what corporations and foundations are doing with their grant making. We can tell again from experience and consolidating your experience and everybody else what they're finding in their work with institutional grant makers. Are there more hoops? Are there the general operating support? It's really hard to know what counts as general operating support. So when I teach proposal writing, I don't do it anymore, but when I did, I told people to make existing programs look like general operating support. No, the other way. I told them to take existing operating support and create a program around
Mm.
something. So I worked in a homeless program, right? We had huge maintenance needs for the site. Well, we turned that into creating a warm, sanitary, welcoming environment for for people coming to seek our services. It was custodial, basically,
Yeah.
keeping the site in good shape, having
Yep.
the bathrooms
We
cleaned, became a program.
we call that packaging, but
Yeah,
yes, same.
exactly. I call it
Yep.
chunking, same idea.
Yeah. Yeah, exactly. It's
So,
funny. I love this is what AFP is amazing. Um, for me, it was my education in fundraising and some of the things I just sort of learned by doing. I got confirmation from my colleagues. Oh, you do that too? Oh, okay. All right. We have both arrived at the same
right.
conclusion.
Exactly. Exactly.
Sometimes, yeah,
We wanted qualified employees. We provided health care. I had to have an HR department in order to make sure the nurses and doctors and uh, LPNs were all certified and insurable and all of that. We created a program around that.
right.
Recruitment and retention of medical personnel to provide services to the homeless population. Uh, Part of the ED, part of the HR department, part of the record keeping and the insurance. Yeah, it was all in
Yeah,
there. It was a chunk.
good stuff.
So
Our group
we've been
is
doing
kind of,
it.
oh, sorry. Go ahead, Melissa.
We've been doing it. We just don't call it that.
Right. That's exactly right. And, I always also advise, look, our foundations are our partners. And if we need something and they're not providing it, general operating, whatever, we should be asking for that. And it's okay to hear
Yes,
no from a funder, right? It's okay to hear no
you can
because
only educate them if you
that's right.
provide the story. We do have a question here. What about next gen and rising gen
Ooh,
giving? That's a great question. Evidence shows that the millennials are now giving at capacity. There was this big song and dance 20 years ago. Oh, the millennials aren't giving. I didn't give when I was 20. I didn't have any assets. I hadn't established roots in a community. Of course I didn't give. I'm a boomer, right? Well, now boomers are one of the most generous generations. Well, I've got assets. I've been living in the same place. I've got kids and they're all involved in things. So I give to where they're involved. Millennials are at that point in their lifestyle, in their lives. Um, so giving them an opportunity to live their passions is really important. They don't care about organizations. The data show that in general, millennials and Z and possibly Alpha care about causes. So don't say support the Jewish Federation, say support people with needs in your community, support students and their experiences. Make it a cause, not an organization. If I give blood to the platelets, doesn't matter. But if you said, "Oh, the Red Cross, give to the Red Cross," I'd give because I know the Red Cross. I love the Red Cross. I'm there every 2 weeks. I have an identity with that organization. My daughter started being a blood donor. Her blood donor site isn't even the Red Cross. It's called something else. She doesn't care about Red Cross. She cares about making sure that people in need have A plus blood. She's 30. Now, that's a sample of one, but you can generalize actually. That is what the data show, and that has been true for the millennial generation for 20 years. They care about causes, not organizational identities, which is one reason it's really hard to have the quote, the next gen support what their parents did.
hmm
Because I am identify, my background is my college library.
hmm
Identify with my college. My kids don't care about their college.
Yeah. I
So
say I go back to it's years now, but that book Bowling Alone, is that the
Yeah,
name of it?
yeah.
Where they talk about the shift in societal values from belonging,
Mm-hmm,
which was in the past, to
mm-hmm.
choice.
Right,
And now with your daughter, it's, it would be a matter of appealing to that part of her that sees herself as a champion for health of other people,
right,
not a champion for the Red Cross or the
right.
Jewish Federation
Exactly.
or whatever. Yeah.
Right.
Yeah.
Exactly. Exactly.
Hmm.
And Katie has asked if we have data about how people are giving. We don't do that at Giving USA. Again, our information, except for that we can say people are giving through their itemized deductions on 1040s or through estate tax returns or through foundation returns. We don't have data about the actual transaction level giving, online, mail, etc. N10 does that, and M plus R benchmarks does some of that for online. And they have actually seen a flip. Email open rates are declining, and direct mail seems to be a little bit on the rise. I don't have data. I'm quoting a report I glanced at a few months ago. But look at M plus R benchmarks. They survey organizations. They have a couple hundred big organizations that are included in their study, and they might have some insights for you that would be more useful than my vague
An
memory.
Another Giving USA partner, Dunham and Company,
Oh,
they
yeah.
focus on that,
Hmm.
that how donors give. And I think part of the fundraising effectiveness project also
Oh,
focuses on
good.
the channels of
Hmm.
giving. So those might be two places to go, Katie. It's Dunham and Company and the fundraising effectiveness project.
And Giving USA might have something on the individual chapter. I haven't seen it yet. Um,
Yeah, right.
that
I
might
haven't seen it
report on
either.
one of those. So if you buy the book, that whichever version you want, e-version or print, uh, because it's an almanac, they try to summarize those reports.
And just a little commercial, you can see it on the slide, but you do get 30% off if you use our code GRANTP30. So feel free to use that. That's just a bonus that Giving USA provides to those that participate, like we do in the production of the study.
Super. See a couple more questions not in the chat, but over in the Q&A. Is that
There are. So first question is, our anecdotal experience is showing more declines from foundations in 2025 and 2026,
Mm,
something that they've never experienced. Are there any comments on that? It is a slight increase in declines, but it's worries.
yeah. Um, I would just I would echo that. We hear that a lot. We have heard that a lot. That foundations, as Melissa was alluding to, they changed their priorities. They've become a bit more conservative about their giving because they don't want to be targeted for any reason. I don't, there could be a million reasons that they're doing it. I would say that a to do if you're in that scenario is to try and get in front of those decliners to you and really just ask them all kinds of questions about why and what you can do in the future, if anything, or if this is a no forever. I would just try to dig into those. Don't take them at face value, but keep going. And then, foundation giving is all about alignment. What you do, what you say you do, and then what the foundation does and what they say they do. And where there's overlap, that's where the magic happens. And sometimes that overlap area can change based on foundations shifting in their priorities. It's just a matter of trying to get ahead of it instead of being behind it, like knowing this might be a no instead of getting the no as a surprise. And I would say, just making sure you're prioritizing personal outreach to those contacts that you have at the foundations, whether it's before, hopefully, your applications or after a decline happens.
yeah. One of my questions is what can we do to submit a strong application for this round? Sounds like you've had
Mm-hmm.
some prior funders who might have been saying no. Um,
Yeah.
and again, Lauren's point, if it's not if it's a permanent no, then that's an issue. But if they're still considering you as one of the part of their community, it's like how can we?
Yeah.
Will it take to help us submit a strong proposal?
And yeah, I think honestly, one of the biggest pieces of advice I always give is to make sure that all parts of your application are talking about the issue and talking about how you are working through, talking about it in the community context. I think lots of times I see applications even strong applications that are doing amazing work. But like they start out with, since 1975, we have been doing and we have been serving 10,000 people, whatever. That's just not compelling. If you start with a community need, you immediately rope in that program
Mhm.
officer who cares about that very same community need. So just making sure that you're elevating the story of the community and the work that you're doing and how it's solving the thing that the foundations care about. That's what I would say is my biggest piece of advice to turn the knob up on the
Mhm.
compellingness of an application.
Yeah.
Yep. And then another question, Melissa. I believe there's been some recent tax changes to deductions on charitable
Indeed.
giving, putting in floors and ceilings to
Mhm.
individual donors and floors for corporate. Has something like this happened in recent memory? And if so, what do you think we can expect to see based on past precedent?
Hmm. Um, there haven't been floors per se, to my knowledge. There have definitely been ceilings. And past precedent for tax rate changes indicates that the amount of giving goes up when the tax benefit, in other words, the amount that gets to be deducted, the effective tax rate is higher. So if I'm in a 40% tax bracket, doesn't exist anymore, but if I were in a 40% tax bracket and it gets cut to 37%, I'm going to give less because the tax benefits of giving have diminished. This effect lasts at least a couple years until people kind of even it out. Some people pre-give when they know that tax change is coming, and we saw that. We know that happened in 2025. People saying, I'm going to make my gifts in 2025 because next year I have to give at least over 1%, and I can only deduct the amount that's over 1% of my AGI. So I'll give now, take the deduction in 2025. So that's part of what drove 2025 increasing. So there's a uh, anticipatory giving, in advance. Then there will be, I'm going to predict, um, depressing effect on giving because of that floor, that 1% floor that applies to people who are itemizing. Doesn't apply to us. In fact, the non-itemizers all of a sudden get a deduction that we didn't have before. $1,000 a person to two people in a household on a tax return, then it's $2,000. So some people are projecting an increase in giving from that. I think there's going to be an increase in record keeping, not necessarily an increase in giving. In other words, I'm now going to keep track of how much I give instead of saying, oh, I don't know. So if somebody asked me, I could report an amount because I will be keeping track of it. Um, I don't know that there might be some new donors who say, oh yeah, it won't cost me as much because I can deduct that. So yeah, there will be some. The cap on giving is at the highest tax bracket, and they can only deduct up to 35% of their AGI. It used to be 50 on stocks. If you gave stocks, you could only. So yes, that will also have a depressing effect. But the biggest problem is the floor, and we don't know. We just don't know if people will continue to give despite the fact that they can't deduct at that floor.
Just an update. I did try to post the Giving USA graphic, the link, but I think somehow the Google permissions wasn't right. It's open now, so if you see
Oh,
that
thank
in
you.
the questions, go there. And if for some reason you can't download it, you can contact me or anyone at
That's the
Grants Plus.
infographic that we talked about earlier.
Yes,
Yeah. Oh,
yes,
great. That's lovely, Lauren. Thank you.
yeah,
Yeah. Jim, my mentor in this field says people give when we ask. Yes, they
yeah.
find a way. If they care about the cause, they will find a way.
That's right.
I,
And
I
the more personal, the better, right? If
yes.
you get a mass appeal and you see, oh, well, it looks like everyone's doing that already. I don't need to participate in that. This is something I heard from a really smart fundraiser a long time ago. He said that the donor newsletters that have the big check actually have the opposite effect because people think, oh, it's already covered. They don't need
Yeah,
me. I
sure.
can't give a big check. Therefore, they don't need me. But
Yeah,
if you highlight the story of the everyday donor, that can help people see themselves in your
yeah.
organization better.
When I worked in homeless services, we didn't get big checks, but we highlighted the people who gave a case of water because
Yeah.
bottled water was one of the key forms of outreach in Indianapolis. Offering a bottle of water to somebody who was under a bridge on a hot day was the entree to services. So the more
Yeah.
cases of water, the better. And it's
And
not a
say,
big gift.
right, and this probably goes without saying to an audience of fundraisers, but it's telling those stories that
Hmm.
matters. And that
Hmm.
doesn't matter if you're talking about an individual gift, a very large grant. In fact, I was just looking at a successful federal grant, and it started with one of those stories. The whole federal application that got $25 million over 5 years started with an individual story at the very top. So
Wow.
it matters.
Yeah. Yeah. That's great. What a neat story. I'm so appreciative of all the nice comments. Somebody said the side notes and comments have been helpful. I hope that's what adds value. You can read the book yourself. You can get the infographic, but it's the context that I hope that I can provide. And other comments as well, Lauren in particular, this year, and some of the comments, some of the chat that I've seen has been helpful as well.
Melissa, you are phenomenal at making this data make sense and helping bring it down to the level of the work, those of us that are just doing the work on the ground. So we are so, so
Oh,
grateful to
my
you.
pleasure. Yeah, yeah, that's great.
So, yes, I will wrap it up then from here. If you have additional questions, feel free to contact any of us outside of this. But thank you so much for being a part of the conversation. Special thanks to Melissa for
My
being
pleasure.
providing this insightful presentation, helping us with the trends and takeaways. Also, sincere thanks to Ken and everyone at AFP Cincinnati for partnering with us to bring this important conversation to the community. And especially grateful to those event sponsors for today: Horizon Community Foundation, Leadership Council for Nonprofits, Magnify Giving, and Movers and Makers. All of you are bringing this important data to the community and helping strengthen the sector, and we appreciate that. Thank you too to all of the attendees. It looked like we had 181 at the height. Woo, that's amazing for our online presence. But your thoughtful questions are important. I know they bring context to people who maybe aren't putting their questions in the chat. But your engagement made for a rich and valuable discussion. Please share the recording with those who could not attend. Keep an eye on your inbox because we will send the link to the recording, a copy of the slides, and a brief survey, which would be very helpful for us as we plan next year's iteration. And we'd love to hear your thoughts for future events. So thank you again so much for joining us. Thanks again, Melissa and Ken.
Thank
And
you, everyone. Yeah.
yeah, we'll see you all soon.
And I will send that question, the answer to the question, what happened in 2025, 24 to make the foundations go up. I'll do that right
Super.
now.
We'll share that. Okay.
Okay.
Thanks,
Thank
Melissa.
you all.